Happy Friday, everybody, and Happy New Year. We're 2 weeks into 2022, and I can still say Happy New Year because it's the first show of the year. Welcome back to Live Lunch and Learn. I am your host, Lambros Demos, and as my first guest of the year, I'm very excited to bring back a leader in the mortgage industry. He is a champion for financial literacy, and you know him from CB24's Hot Property and from his popular Instagram channel at Vince G Mortgage. Please welcome back to the program, Vince Gaetano. Welcome,
Hey,
Vince.
Lambros, how are you? I always feel great when you give me that intro. It makes me feel like, wow, did I accomplish all that?
Hey.
Thank you so much. I really appreciate it. Happy New Year.
Yeah, thank you very much. Is it? I guess it's not too late. I mean, to say Happy New Year. Are you still saying Happy New Year to people?
Yeah, I am. I think we got another couple days of that, and maybe I'll stop doing that. But I have been on a streak of not writing in the year 2021 for now 14 days. So I'm pretty excited about that.
Does anybody write anymore? I think it's all digital, right?
Filling out forms and signing checks and doing that sort of stuff. So
checks.
I always give myself a pat on the back for that.
Wow, checks, another dinosaur term. No offense. Yeah, okay. Awesome. So how you been? How was your holidays?
It was a little bit disappointing. We had to cancel a lot of things. One of my kids tested positive because he came in contact with somebody dead, and we had to cancel all our Christmas and New Year's Eve plans. But we had a lot of food ordered, and we played a lot of board games, watched a lot of movies and Netflix series. So it was good. We had fun with the family. It was quiet, and unfortunately, the lockdown first week didn't help. So but we're making the best of it, and I think we're moving forward. I think things are starting to cool down on the cases. I know ICU is still struggling a little bit, but hopefully we'll get through this in no time.
Yeah,
get back to normal. The sooner the better.
Knock on wood. I just amen to that for sure. For sure. All right, so let's look ahead then. 2022 is here. There's been a lot of talk about interest rates this year, home prices, so much to talk about. But let's start with everybody's favorite topic, interest rates. As I mentioned before we went on the air, there's been some conflicting reports, at least from what I've seen. Some are saying that interest rates may go up as early as this month. Others are saying April. What do you think?
Well, there has been a lot of talk about rates going up, especially on the Bank of Canada side. That impacts the variable and floating rates. Some economists have indicated that as much as 8 bumps are going to be coming in 2022. The most recent lockdown in Ontario, as well as the floods that took place in BC, that's impacting supply chain issues. And of course, stimulus checks going out. I just don't see rates going up from the Bank of Canada's perspective anytime soon. But what we have seen is the fixed rates move up. Fixed rates have creeped up slowly. We had another bump this week. Royal Bank started that trend. They bumped up 10 basis points. So the fixed rates are moving up. We're looking at the high twos now for a 5-year fixed rate. And although the variable hasn't moved at all, what we're also seeing is banks are tightening up the discounting off of prime. So we're seeing less and less of the prime minus ones, and now looking at prime minus 90, prime minus 85. And I think that's a way the bank's saying we need more margin, we need to bump up rates. And, even though the Bank of Canada isn't increasing, I do see some movement afoot where we are seeing some higher rates, and could mean that we could see some leveling off on valuations in the real estate market. But there is still a lot of dinosaurs out there, people with prime minus 1, prime minus 1.1, that are benefiting significantly from these low rates. And the government isn't just going to be increasing rates anytime soon with the stimulus check still going out the door.
So you would still advise people to go with the variable if they have that option?
Well, one of the things we do, Lambros, is we always caution people, if you're going to go variable, you got to do it with a plan. We always encourage people to increase their payments to reflect a fixed rate mortgage payment and accelerate that repayment. Um, if you're just taking the lowest rate for the sake of having the lowest payment, I think that could be detrimental because rates will be going up at some point. The rate at which rates are going to be going up will not be as fast as everybody seems to think they are. As I always tell people, when you look at things at 35,000 feet, the government has to pay for debt as well. And they have $1 trillion of it. And when that happens and rates start moving up, the cost to service that debt goes up. So they do have some influence over the pace of that increase. And if the economy still isn't clicking at the pace it should, I just don't see how they could start increasing at a rapid pace.
Yeah, yeah, no, I agree with that for sure. For sure. So, I mean, but there is a lot of speculation out there, and people are worried that, oh, once rates go up, is the housing market going to crash and this and that? That's just a lot of baloney, in my opinion, for sure. Because, I mean, ultimately, you and I both agree the real problem is housing supply, right?
Yeah, and one thing I've always told people is we don't have an affordability issue, we have an availability issue.
Yeah, and I've quoted you on that a few times, actually.
Yeah, and what I think people fail to realize is that this stress test, as much as it's been a thorn in everybody's side, it has had a benefit because everybody's qualifying between, well, the older folks that have bought 2-3 years ago were at 479. We're now qualifying people at 5.25. So when you're paying 2% or less, 2.5, and you're qualified at 5.25, there's a lot of wiggle room there. Like, unless you're going out and blowing your brains out on, leasing cars, buying cars, starting to ramp up debt that is imposing more stress on your cash flow, that's on the buyer. I don't have sympathy for people that ram up debt and unsecured debt and now have a cash flow problem.
Right.
The qualifying rate, the stress test, is designed to protect people from increases in rates. So if you're in a variable paying 1.5% or less, and you're qualified at 5.25, you got 3.75% of wiggle room.
Gotcha.
Okay, that's 15 bumps in the Bank of Canada rate. And what people need to understand, and it's not hard to understand, is you're qualified at the income you earned when you qualify for the mortgage.
Right.
Chances are your income's going up. Your mortgage debt's going down.
And by that time, the mortgage goes down, exactly. So
yes,
yeah.
And this is where people need to not believe this narrative that the media tries to put out there. And the media's motto is very simple. If it bleeds, it leads. So they try to scare the shit out of people and make them believe that something's happening when it really isn't. I think people haven't had anywhere to spend their money other than Amazon. Can't go out. Everything's locked down. Savings rates gone through the roof.
Right.
The amount of credit card debt that's been reduced during COVID's been unbelievable. I think it's reduced 17, 18%.
That's awesome. That's great.
And that's a tribute to people that have been prudent with their money.
That's right. Like you said, they can't spend it anywhere else. They can't.
No.
A lot of people haven't been traveling or et cetera. But get back to your point about the stress test. Because, I mean, let's not kid ourselves. There's ways around the stress test, if you go, because that only applies to A lenders, right? And Alt-A lenders. So there's B lenders, there's C lenders, all types of lenders that aren't obligated to incorporate the stress test. Am I right? So I want to know what percentage of
the stress test applies to everybody.
So even not if you go with my understanding is private lenders or C lenders or whatever, they don't need to apply the stress test, right?
Privates don't. Alternative lenders still do.
Okay.
Alternative lenders are governed by OSFI, federally regulated. They do.
Okay.
And they will be 2% above the contract rate.
I see.
Or 5.25, whatever's higher.
5.25. Okay. So what percentage, just ballpark, would you say people are in those categories, and what percentage of them are, under the stress test, and what percentage are not?
Well, that's a good question. I think what's happening is, and I think the point you're trying to make is not everybody falls under the traditional prime stress test, which is 32, 44, ratios.
Yes.
Alternative lenders could go up to 50, could go up to 60 in some cases. So they're able to stretch those qualifying ratios under their deemed stress test. But they have to have a stress test.
Oh, they still have to have the stress test. Okay.
They still have to have a stress test.
Okay.
And having said that, when they take advantage of those higher guidelines, they want more down payment. So they want more equity, right? They're lending up to 80%. They're not going high ratio. They're not going to 90, 95 as what an insured mortgage could do. So
yes.
there's a matrix there to help people get into those homes, but they still have to qualify.
Still have to qualify. And typically the ones that don't fall under the stress test, like the private lenders, charge a higher interest rate anyway, right? So they're already paying, 4 or 5% or whatever it is, right?
They do. Yeah. There's a lot of privates. I run a private lending operation as well. We help a lot of self-employed people that just don't have the declared income. Most of their income is written off. It's tax deductible. They have that ability to do that. So they're okay paying a little bit higher rate because they're not paying it in taxes. They're paying it in the risk of being self-employed and with no safety net to help them. So they're in that bucket, and we help quite a few of them.
Nice. That's great. I want to get back to the self-employed thing, but we have a question here from a viewer, and a great guy, Corey Willis. He's in Niagara Falls, and he's asking if land taxes are going up.
Well, the City of Toronto just announced that they're going up almost 4.4%. So I assume that's going to be across the board to deal with all the additional costs associated with COVID, all the safety protocols, health protocols. I would assume that's going to be across the board, and we've seen it already. It was announced yesterday that the City of Toronto is going up 4.4%. So it's going to be an impact. People are going to have to realize that if you want to buy a home, there's going to be additional costs. And the feds are even talking about a 1% tax on the value of homes over $1 million. Like, how insane is that? That's got to be the most silliest tax available because it's deferred. It's going to be deferred until the person sells it.
Yeah, exactly. No, that's a ridiculous tax as well. And like you mentioned in one of your, I guess, Instagram broadcasts, that 1% is not even a dime in the bucket for them, right? It's like really, it's pathetic actually. So,
well, I think that was the vacant tax.
Oh, the vacant tax. Sorry. Okay, I misunderstood.
Where I thought that was just a joke.
Okay.
But, they're going to try to tax everybody to death. And what people need to come to realize is that taxes don't build homes. Taxes don't put shovels in the ground. And that's what we need. We need shovels in the ground. And I just don't have any faith that these three levels of governments can align themselves to do it. It's just impossible. And as citizens, as Canadians, we need more accountability from our elected officials, regardless of the party. I'm not here to be partisan in any stretch.
No.
But the reality is they have to work together. Like yesterday's housing announcement. Like, I got to tell you, Lambros, it was one of the most comical things I've ever seen in my life. The media announced this housing announcement at 11 o'clock. I get on there, and we got three MPs patting each other on the back. Okay, about a job well done under the National Housing Strategy. They announced 74 homes, 74 affordable homes to be built in Kitchener, Cambridge area. Okay, now 74 is not going to cut it. Like if it was 74 homes on Mars, aligning with Elon Musk, that's a story. But 74 homes is nothing. Like, it's crazy.
No, I hear you. I agree with you wholeheartedly. At the same time, look, I'm not a government apologist, far from it. The 74 homes are, in my understanding, was there were for like subsidized rental housing, and they're trying to get the homeless off the streets. They're trying to give it to. I think a percentage was for the Indigenous people, another percentage was for women from domestic violence situations or whatever it is. So they're trying. So, and there was a waiting list. I think what I heard was like 250 people on the waiting list. So hopefully some of those people will get into these, and they're 1-bedroom units, right, in a building. So, but for our situation, real estate situation, yeah, it does nothing. And I don't see why the whole hubbub of an announcement came up. And to your point, it's like, you get all your expectations up, expecting some great announcement, and then this is what they come up with. So,
well, every party made an election promise, and we covered it 2 shows ago. They were pretty ambitious targets. Hundreds of thousands of units to be built. Many in the first 2 years. Okay. The election was in October. We're January. Like 74 units. What's going to start it?
Yeah. No, I mean, well, again, those 74 units aren't part of the actual, real estate traditional buyer and seller, right? These are designated for subsidized homes, right?
Absolutely.
For people. Yeah.
And this is where I think there's a disconnect between what people anticipate and expect and what is being delivered.
Exactly.
And you're going to call a national housing strategy and let people think that there's home affordability coming for people looking to buy homes. You have to be very clear that this is more a social safety net issue. It's not a national housing strategy. Those homes are designated for people on the edges of the social safety net that we're trying to help. And to have a press conference for it and see these MPs patting themselves on the back about a job well done, well, crazy.
The same minister who mentioned the 74 homes also said, because a reporter asked him about the blind bidding, actually 2 reporters asked him about blind bidding in a separate conference. I don't know if you saw that one. And he said, he was very firm about it. He said he's going to eliminate blind bidding. And they think that is going to help the cool off prices. Or
what jurisdiction do the feds have in Ontario?
Well, that's just it. They don't have jurisdiction in Ontario, so they have to get the Ontario government involved, and good luck with that. Secondly, when they first proposed it in their election promises, I was kind of like, okay, maybe there's something there. But now the more they think about it, I don't think it's going to make a difference at all, because once you open it up, it's basically highest price wins anyway, right?
But Lambros, you're absolutely right. And here's the thing: you want to make it transparent. You still only have 1,000 homes and 10,000 people.
That's right. That's right. Yeah. So whoever has the deepest pockets is going to.
Now I get to see everything. It's only going to drive prices higher.
That's right.
I don't want to guess.
That's right. And I'm just going to keep outbidding you, and you're going to keep outbidding me until one of us, collapses, and that's it, right? So it might drive prices even higher than what they are right now. So it might have the reverse effect of what they're trying to do.
I had an opportunity to meet with Housing Minister Ahmed Hussein just before Christmas. We had a coffee. Nothing planned. It was just coincidental that I was in the same place he was at, and he was kind enough to give me some time. And I chat.
Sorry to interrupt you, but I wonder if you saw your rant last night.
I hope not. But what's interesting is, when we sat down, I said, "Listen, you got your mandate letter from the Prime Minister, and one of the key components is to go after investors, right? Investors are in the headlights of the government, and we talked about that. And I said, okay, well, you believe that investors have spiked up to 25% of purchases, down from about 12, 13% a few years ago. Right? And you want to go after them because you really believe that the narrative is that these investors are eating up all the properties. And I called bullshit. Okay. I said the stress test has created a situation where a huge number of parents are having to co-sign for their kids to buy homes. Okay. And now those parents have to go on title. The majority go on as a 1% owner, right? Because lenders want them on title. They need that income to qualify them under the stress test. And now that parent is deemed a multiple homeowner because they have title of more than one home. Is that an investor?
That's an excellent point.
Right? And he looked at me and he goes, Well, that's a good point. I said, why don't you drill down into the Terranet stats, the land registry systems? They have all the information on the title owner, including age. And why don't you drill down and see what the age of the title holders of that property are and see if there's a 20, 30-year gap in age, because chances are that's a guardian or a parent helping a child. And then
Yeah.
understand if those numbers are real.
Yeah.
Like I get the vacant home tax. Those homes are sitting there as a savings bond for foreign investors or people that aren't living in them. They're not putting them into the housing stock. I get that. But for the situation of chasing investors and believing that there's this narrative of people sucking up property is garbage.
Mhm.
Okay? The stress test has created a problem with young people unable to buy in the city. Values have skyrocketed. The stress test on a $700,000 mortgage, the interest alone at the stress test level is over $35,000, $38,000 when they're really only paying 2%, which is 14 grand.
Right.
So they got to come up with this $24,000 stress test gap,
Yeah.
the safety net. Can't qualify.
Yeah.
But they could pay, they can't qualify.
No, excellent. Those are excellent points. Yeah.
And he sat
Yeah.
there with his secretary's with us, says, he said, write it down. Listen, he was the immigration minister. He's now the housing minister.
Yeah.
So he's getting fed all this data from stats people that want to present their narrative.
Yeah, he actually wears several hats because in his bio it had minister of this, minister of that, diversity and housing and CMHC and inclusion. Yeah, everything. It's like, how much can you
Jack
do?
of all trades.
Jack of all trades, master of none, right? Isn't that what they say? Oh my God!
But
wow,
this is what people like us who are in the weeds see every day. Okay? Yeah. The challenge in our world, in the lending world, is that it's not standard anymore to just have two people on title.
Yeah.
We've had to build systems to accommodate 3, 4, 5 people on title.
Yeah, fair
and
enough.
People aren't appreciating that.
So let me ask you then, from your perspective, how many people have you seen, because with the rapid rising cost of homes, obviously equity goes along with that, how many of your clients have tapped into their equity and bought a second property or a third property, et cetera?
I would say the majority.
Really?
I truly believe that people, well, a lot of them are buying cottages, second homes.
So recreational and plus for their kids.
Many have taken money out of their homes to buy a place in Florida.
Okay. Oh, wow.
They're just not they're not comfortable with the lockdown measures up here.
Okay.
I've seen a number of people just buying offshore, down south, in Florida and elsewhere. Arizona was another one.
Right.
And they're just helping their kids. They want to help their kids out. The advent of the reverse mortgage has also been something that's been quite interesting to see, because it's now being used as a tool to help kids without a payment obligation.
Yeah.
It's almost like an advance on your inheritance without me having to worry about whether you're going to make the payments, because I'll just take it out of the equity out of your inheritance. And they don't have to chase anybody for payments and put people in awkward situations. So that has really been the narrative in our shop.
Yeah.
People wanting to help their kids, people wanting to buy second properties from a cottage or second home situation. And they're just looking to buy real estate because they don't have to get rid of theirs.
Yeah. Yeah, awesome. And you have a comment here, a compliment from Louise, a fellow mortgage broker as well. You're spot on. It's the Wild West in Brampton right now. I think when you were talking about the investors and the speculators, et cetera, right?
Yeah, there's some crazy values. Like I truly believe we've hit the top. If there's any indication, is in the December TREB numbers, is that the average purchase price of a home on December I
Mhm.
think it was 1157,
Okay.
1.157,
1.157. Yep. Okay.
849 to end the year.
Yeah.
It was $5,500 less than November.
Fair
Now,
enough. Yeah.
a
That's all across
big
GTA though,
that's
right?
all across GTA, and a
Yeah.
big chunk of it was condos in 416.
Yes.
But
Yes.
the biggest segment was detached homes in 905, which
No, fair enough.
represented 31%
Yeah.
of that figure. So there is a little bit of hope that things may be leveling off. And I think my utopia would be things staying flat for 36 months. Everybody can catch their breath. I
I would
think
love that as
I
well.
think I think it'll free up a lot of
Yeah.
listings if we could get these long-term care facilities in good working order and there's
Yeah.
trust reestablished in those facilities. Maybe some seniors will be more comfortable selling their homes because a lot of seniors, that segment that sold empty nesters that went into homes, that didn't happen during COVID.
Yeah. No, you're absolutely
So
right.
so all of a sudden, those people are like, well, hold on. I got some grandchildren. They lost their job in the service sector, hospitality. They could stay in my home. They could look after me. I give them a place to stay. And all of a sudden, if the economy starts moving, people are confident to go into long-term care facilities and retirement residences. We could probably see some of that slack
Yeah.
help out from an inventory perspective. But
Oh,
that may be
100%.
wishful thinking.
100%. Yeah, no, absolutely. Great points there. And Louise, thank you for your comments as well. She says prices seem to be climbing weekly here as well. Basement apartments, rental income are popular. I hope it levels off soon. And it's sad for new home buyers. And I couldn't agree more. It may seem counterintuitive for me because I am a real estate agent, a real estate broker, but I would love to see prices level off, at least give us some breathing room and allow people to catch up because these prices are insane.
Louise
Yeah.
talks about rental units, and one thing that the media has not talked a lot about is the City of Toronto's Garden Suites initiative.
Okay.
On Wednesday, the Planning and Housing Committee unanimously approved another phase, which is being recommended to City Council, I believe February 2nd,
Okay.
which will make garden suites as of right for every homeowner
Yeah.
in Toronto. And that's
Yeah.
huge because you could build up to 650 square feet slab on grade quite quickly.
Right.
And some of the designs that I've seen from some of the builders I've had on my Instagram show
Yeah.
are phenomenal. And if you're more than 25 feet from the main house, you could put up 1,300 square feet on based on two stories. So you could build some really nice units
Is
for
that on your own property, like on
it's
your
on your own
backyard?
property.
So, okay, no, it's great that they've done that, but how many homeowners will actually want to do that? Because I know if I had a house, call me whatever you want, but I wouldn't want someone else living in my backyard. So how many people are
Well,
actually going to do this, you think?
I think this is going to be a very popular initiative.
Oh yeah.
The laneway program, I think, only generated about 350 to under 400 permits.
Yeah.
Not everybody has a laneway. Everybody
Right.
does have a backyard. And
Right.
where I see the opportunity is these nuclear families. Kids,
Okay.
kids can't
Okay.
afford
So
kids can't afford
gotcha.
to buy homes. Hey, I could probably
So have the kids or the in-laws
kids,
setting up.
in-laws,
Okay.
uh, personal care workers. Like
Interesting.
a lot of seniors are reluctant to go into the long-term care facilities and they
Okay.
don't want anybody living in their house. But you know what? If I have a unit in the back and I could take a reverse mortgage to build a unit in the back, which has no cost to me, and
Okay.
you could build for about under 200 grand. It doesn't have to have a basement.
Okay, but what about infrastructure? I mean, I know there's some pockets in especially in the West End there where there's issues with sewer backups, et cetera, et cetera. So, I
You
mean,
would connect
adding
with
all
main
these
line.
extra
You're
houses.
adding to the housing's main line. You're
Okay.
using their electricity, you're using their sewage line. You do not have to go to the city. You connect to the housing line.
Okay.
And
But
that's
is
under
that gonna
right?
is that going to maybe overburden the already old sewers? Because these sewers were built decades ago, so I don't know if they can handle all this extra.
Well, it's gone through all the permitting.
Yeah. Permitting is one thing, but in reality,
Will everybody do it? Not really, but if you
yeah,
add 5 or 6 a street, I think that's units that go
yeah,
into the rental stock
right,
that could help out this logjam of
okay.
properties, right, that are
Then
not in the marketplace.
yeah, and then parking becomes an issue. So I'm just playing devil's advocate here. Traffic congestion, all these things that I don't know if they thought them through or not, and what's going to happen in 10 years from now if every second house has a garden suite and extra people living there. Parking's already an issue in West Toronto, right? So,
Well, nobody goes out anymore.
well, let's hope like in 10 years they will.
Everybody's living in their pajamas in traffic.
Yeah, now, but let's hope this ends sooner rather than later.
But
My
the
gosh.
reality is we do need rental stock, and,
Yeah.
and one of the problems our city has is we have not held universities to task and all these educational institutions
Yeah.
bringing in these foreign students and not housing them themselves. Like governments should start hitting these universities over the head and saying, okay, you're bringing in how many thousands of foreign students? That's great. House them yourself. Build the facilities on your campuses. You got these endowment funds in the billions. Build these units yourself and house them yourself. Because we have 600,000 foreign students that come to Canada every year, and they eat up the rental stock that's meant for its residents.
Yeah.
And the reality is they're nomadic. So they're in and out in a year, which are a gravy train for investors and landlords, because guess what? I'm not stuck with just a 1.2% rental increase. I could reset my rent when they leave.
Yeah.
So all of a sudden we see these inequalities and rent increases and stuff like that. What's driving the bus? And I think these government officials need to really understand the dynamics of what's going on and driving this market. And I don't think they have a clue. Personally, I really don't. You can look at every supply and demand chart, every economist theory. The reality is they're not looking at the real issue.
Yeah, no, I agree. Thank you as well, Louise. Louise says she has to go, but great program. Thank you for more knowledge always. And she mentioned a point here about Brampton as well. And not to belabor the point about Brampton,
It's a great town.
It is a great town for sure. But to your point earlier, you mentioned about prices, where they kind of dipped a little bit overall. I think in segments, some have dropped, like you mentioned, but others have increased. And Brampton is one of them that has increased, and like dramatically increased. I think it went from 1.0 something to 1.2 in 1 month, like from November to December. So that's and I think we're talking about 9 days of inventory.
And let's preface the fact that December sample size wasn't very high, right? There's only 6,000
100%. So you're going to get numbers all over the place. So I think it's too early to make a judgment call on whether or not prices are flattening or dipping or whatever, right? So let's see what happens in January and February and see go from there. Yeah. Sorry. Anything else you want to talk about, Vince? We're 35 minutes in, so.
If you have any questions, fire away. You know me, I like being on the spot.
Yeah, awesome. I think we covered mostly. Oh, I do want to ask you about self-employed people, because you mentioned that off the top. Because with COVID, a lot of people were leaving their jobs or working from home, and we saw a lot of like startups, a lot of entrepreneurs and things like that. So looking ahead, I think that's going to be a continuing trend. People are going to be working for themselves, so they're going to need some kind of qualification. And I know right now for self-employed people, it's so hard to get a mortgage. Banks like to see regular checks coming in, et cetera, regular income. So what hope is there for self-employed people to get a mortgage these days and going forward?
Well, we specialize in self-employed people.
Nice.
I really enjoy working with them. I find that they're a lot more practical. there are a number of lending institutions that have a really strong appetite for self-employed people. And
Nice.
for the reason that they tend to have a finger on the pulse of the economy,
Okay.
and they feel what sooner than salary people what's happening in the marketplace. And they're very protective of their equity,
Okay.
and they react and pivot a lot quicker. The reality is self-employed people are going to need a little bit more down payment. You're not going to fall under a high ratio program.
Yeah.
You're going to need 20% or more.
Gotcha.
And if you have a very viable business, you'll be able to get financing.
Okay.
And you're going to pay a little bit more, but keep in mind, as I always tell people, if you want to apply for $1 million mortgage, you need about 250,000 in income to qualify.
Yeah.
And if you're self-employed and you're only showing 30 to 50 grand in income, you can still qualify if you have a business that's active, has continuous income. Although you have expenses and stuff,
Right.
you have the wherewithal. You're not paying the 40, 45, 50% tax on 250 grand. You're paying less. So the premium and interest cost that you would pay on the interest rate for being self-employed will not outweigh the tax burden you'd have at that income level. So we do a lot of whiteboarding in our office. We show people the visual difference.
Okay.
I believe the majority of people are visual learners and not auditory, so they can't quite grasp numbers when
Agreed. Yeah.
running them quickly. And they sit there and they said, you know what? That sounds great. That makes sense. And I always tell them, give your accountant a hug, buy them a bottle of champagne, take them to dinner if you can. Everything's closed. You can't do it right now. But understand that it's not a bad thing to be self-employed. We get you the financing. It's going to be a little bit more expensive, but it's going to be cheaper than the tax you pay.
Yeah.
And we help them out. We give them some clarity. We give them some direction. And we give them a plan. And it works out quite well.
Nice.
We help a lot of them.
Excellent. Excellent. That's great. Great news, Vince. That's awesome. Thank you as always. Some great information here. Yeah. Yeah. 40 minutes.
Lambros, I always enjoy coming on your show. We go off on these tangents and we have a lot of fun with it. And hopefully people get some insight that helps them. And
Absolutely.
I'd love to do it again. So thank you so much.
Yeah, my pleasure. And same goes to you. I always love having you on the program. There's some contact information below here. If you want to contact Vince, reach out to him. He is a wealth of information and always willing to share that information with you. And follow him on at Vince G Mortgage on Instagram.
Thank you so much.
Great.
Have a good one.
Take care, Vince. Bye, everybody. Thanks for watching.